What I've been wanting to do within crypto trading and have been doing a little bit is writing stuff down and teaching how this should be taught, I think. And in this video, this is going to be no exception. In fact, I think it's a very good piece that I'm going to be going over regarding buying low and selling high. And within such, going to be going over the mathematics towards such different key situations. And without further ado, let's get started. And everything you do is within your own risk and own reward management. And I'm going to talk about risk and reward management within such and within this strategy. Therefore, I'm sorry you can't see the letter N in here, some of the right pieces. I hope this does, and on future here. I know you can tell what these words are. I'm sorry for any of these inconveniences that the size content on the right might be overlapped a little bit. But within this, ensure you are buying at levels where it is not likely to endure a long streak of multiple buy orders. So when a market tanks, basically, you don't want to have it go down a bit and, oh my goodness, I bought this much. It's going to cost me so much more to buy more if I do, or I really can't afford to do so. Plan in advance on declines how much you are able to buy. Ensure you have at least 2 buy orders placed when future orders will be subsidized and ease later on. Meaning, okay, I'm going to buy here, 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 and here. And, well, you're going to be managing this with maybe 10, 20, 30, or however many different codes. Let's face it, there's a good chance you can't afford everything you're going to want to buy. And there's a good chance not all of it's going to be bought anyway. Which is why later on down the road, after a buy order or 2 gets executed, you could put another one in. In fact, you could just put one in. However, there's a lot of times markets can go down pretty fast, pretty quick. So you can get a couple in. And if you can afford to, the more the merrier, because if it is in a situation where it goes down like that, and, well, oftentimes it can work out to be decent plays for this game because markets go way up, way down, so on and so forth, and we're capitalizing on that situation. Finally, within this part of it, calculate your net portfolio risk for play and use half to buy now and place between 1/3 and 2/3 of an original buy amount in future buy orders. This leaves base currency with funds when needed. Meaning, let's assume that you are looking to risk, say, 2 Bitcoins. Well, now you buy 1 Bitcoin worth of what you're looking to buy, and you place 1/3 to 2/3 of your other Bitcoin in buy orders, which will leave the rest remaining in balance for whenever you need it. Now let's talk about reward management. This is more fun. The goal is to make a lot of money, or in video game terms, to get the highest score possible. The net higher your base currency grows is the nature of such in games, such for that as your score. If, say, you're starting with 2 Bitcoins, trying to bring that number higher, and you're successfully trading, it's been 3 months, and you bought in a bunch here, sold a bunch there. Maybe the net value might be 2.75 or 3.25, and, well, that's what you're trying to do. Volatility in crypto markets allows for large net gains that can create major exponential returns. Markets go up 3 times, 5 times, 8 times, 10 times, 20 times, 100 times. They do that. These can be sought after by placing sellers, and here's those numbers. I got a bunch of them: 2 times, 4, 10, and 30, 100 for monster gains. But be careful not to sell out and to ensure profits in modest gain. A market goes up, say, 12 times, and the best you got was double or triple the price from where it was. You lost out. You're still going to get some gains, but you want to try to take advantage of it. You need to do so with modest sell or multiple sell orders, and even having tokens back. And chapter 1 to the game is your entry position. You don't own anything of a particular code. You want to buy it, you see it moving, and for the most part, I think you're okay just buying whenever, but when the market's been just in a major uptrend where it's time to sell, I think I would avoid buying such, or if you buy anything, instead of putting in what I've been talking about, whatever amount and buying 1/3 of the portion back. So let's assume you were buying, say, 90, then you're going to buy or say 90 units, then you're buying 30 units, 30 units, 30 units. Well, just buy 30 units and keep buying 30 the way down. That might be the only way that I would consider playing any type of market that's been going straight up. But generally speaking, I like to enter positions when they're down a lot, or if they got, and definitely when they got a good bullish setup, that's for sure. So if it's just a time when you're supposed to buy, then it's a good time to start. So you buy at entry point, and in this case, you buy, say you're buying 100 of them at a price of 1, so you'd be paying about 100. And in this example, the one I like and the one I'm using, you place 5 sell orders at 20% each. In this case, 20 coins or shares or tokens or whatever you want to call them. Make sure the only way you sell many orders quick is on massive pump of epic proportions so that you get epic sales. You don't want to sell so cheap. And these massive pumps do happen. So you don't want to be selling something again where you buy something at, say, 50,000 Satoshi, you sell at 65,000, 72, 81, 95, and 140, and you're sold out. And you know those extra gains can easily come because it's only went up like 150 or 160 or 200%. So you want to get yourself in position where if this thing does occur some sort of pump, what are some realistic numbers that I could obtain? But I also want to make sure that if there's any kind of rallies that occur, that I will get some modest gains as well. So just things to consider within the numbers. There are other creative ways. Maybe have 3 sell orders for 25% of your holdings, which will leave 1 sell order unattended for the situation of a major pump, which can be sold for a greedy higher price. So you sell 25, say, here, 25 here, 25 there, and you still got 25 back. So say you're selling at 50, then you sell again at 120, then maybe you sell 250, and you're like, oh my goodness, now you just, I'm not going to sell till it's like 600 or 700, 800, 1,000. You can do that. And that's one possible way. But the big thing is just think about the mathematics of the situation. There could be cases where maybe you want to put 800 sell orders in, or 57 or 60, whatever numbers you want to play. If you can handle that much volatility, it doesn't matter if you sell 100 units in one order or 1 unit 100 different orders. As far as rake is concerned, you don't pay a flat fee, rather you pay a percentage fee. So it's going to work out the same, 0. whatever percent it is every single time, which is the same either way. So whichever strategy works, of course, the best for you. I don't want to have a whole bunch of sellers and just manage. It's just a lot easier to have, as I'm stating, like around a number like 5 like this works well. In regards to buy orders, the reason why you not need to place many in contrast to sellers is because, and I've talked about this, the management of several codes. When you get situations when the markets are moving lower, let's just assume something like this happens and you've got 2 buy orders filled. Well, you're going to be in a situation where you're going to need to maybe put this sell order somewhere up here, put this one somewhere up here, and so on and so forth, but you're going to be out of buy orders. So after the sell order comes in, maybe even after, or excuse me, buy order comes in, maybe even after this one, you place another one down below. In fact, that's probably what you should do when you have a buy order here hit, place another buy order below where your one previous is going to be, so on and so forth, because you want to buy there, but you can't afford to put buy orders at every single position because of the fact that you only got so much. Another thing not mentioned in the slide presentation I put in is if markets are pumping really high and they've been doing really good, then at some point you can give up on some of your buy orders when you got, like, let's say you got, originally you had 2 or 3, but you kept on selling, buying, selling, and you got a whole bunch of sell orders in, and now you got like 7 or 8 different buy orders as a net result, which can easily happen. Then you can get rid of the lower 3, 4, or whatever buy orders, and that will give you some equity if you need such within this game. But let's go over some of the math within the buy orders. Say you plan to buy up to 6 times more from your original buy for 1/3 of the price each time, and you want much lower prices. But this means whatever you start off with, you want to be able to afford to pay triple what you're starting off with. So in this example, let's just assume you're playing whatever random code that's at 0.572. And an original entry point is 90 units. So you take the amount of units you are willing to risk and you divide it by that price, basically whatever minimum bet to me. So for myself, if say 0.02 is it a Bitcoin, or 0.01 or 0.005 or 7 or 1 or whatever stake game you're playing, you take that number, divide it by that. In this case, it would work out to 157.34. I usually like to round to even numbers, so 150. If a number comes out to like 192.6, I'll just buy 200. That's generally how I do it. Now the rest of the way I'm going to use even numbers. So the next one, you put a buy order in. So you buy it at 572. And you can use technical analysis for key levels, but the most important thing is making sure the number management works out so that there's significant and realistic moves each time. And in this example, okay, it could easily go down to the 4 number, and I'm buying 1/3 of each one. So before I was buying 90 units, now I'm going to buy 30 units. And if I take 30 units divided by the price I want to spend, which is 0.4, that would equal 75. So I would buy 75. I'd have 225 now because I had 150. And that would change my average buy to 0.1 or 0.515 price. And then if it goes down to 1/4, I got another buy order there. And now I do the math again. You're going to be buying more and more each time lower because the prices are cheaper. Therefore, you have, say, an average buy of 423. You got more tokens. It's now 195 plus 150. You got like 350. I'd probably buy 125 just for that simple, easy math number purpose to get me at an even 350. But then, say before, I got buy order or intent. Maybe you have enough to put it in 3 different orders. Maybe you don't. But if you don't have enough, you realize after their first buy order hits, okay, let's put a buy order to buy 200 at 0.15, submit, done, you're ready to go. And then you're always going to want to adjust your sell orders in quantity of orders, price levels, and size totals. So quantity of orders, originally, if you're starting off with 5, well, you have yourself a larger equity to work with. So now instead of selling 5 different orders, maybe you want to do 6, 7, or 8. And you're going to get some decent amounts by doing such. I think I got a slide talking about this, but I'll talk about this now. Price levels, which is obvious. You can keep your old ones in place. There's nothing wrong with that. But you're going to need some new ones. Because if you started buying at 572, maybe your first sell order was 0.75. Well, if you bought last at 0.15, there's nothing wrong with selling, say, at 295 and maybe, okay, I can add another one at, say, 357 and maybe another one at, say, 599. There's 3 additional orders. And then the size totals, well, before you were taking whatever you had in tokens divided by 5. Well, now maybe divide it by 7 or 8 or 9 sell orders, and you're going to notice that those numbers will be going higher as far as how many you sell. Share sizes increase in bear markets, and that's what I'm talking about. You also may swing trade a few times successfully to increase your sell numbers. In either example, this allows for larger sell unit sizes, which is going to result in larger profits from this point on, as you may be selling 100 of some original class instead of the 75 you attended from the original entry position. You started the game, whatever it was at, you could be doing like 100 or 150 or 200 sell totals because you bought all the way. Or what's a fantastic situation to happen is if you get some sort of choppy market where only your top 1 or 2 sell orders ever get executed, but you continuously sell in those areas and buy back. So the price mark doesn't really change much over what would be maybe a multi-week period, but you continuously are hitting the up and down periods. Thus, you're able to increase major sell positions. And in that situation, if you're selling 50, buying back 60 or 70 continuously over and over again, after doing it several times, you could say, wait a second, if I was selling 50 and buying 60, I could almost get away with now, or buying 65 even, I could almost sell 65 and buy 80 the rest of the way. And then you do that, so all your previous sell orders that were selling for 50 will now have 65. So you can add 15 to it, or you can remove it and add another one. Either way, it's about the same. And it's a way of increasing your, compounding your gains, bringing you to a higher level in this game. So now let's talk about these sell strategies. I mean, sometimes you'll buy, markets will just go shoot way down and it'll happen. And sometimes it'll just go right up and all you're doing is selling mostly to start. And we're going to talk about that situation when the markets go way up. But you get your sell orders in place, and let's just assume you bought 100 units at a price of 0.1 of something. So you put your sell orders in. And generally speaking, again, the numbers are the key. You want to make sure that when you go up in level increments, you go up to where the decent amount of gains are played. Sort of like how poker blinds go up. You go from like a big blind of, say, 60 to 100 to 150. But you can get creative and play around with the numbers as you may see fit. But an example, you can put a sell order, I say, at 0.15, 25, 40, 75, 100. So your last sell order is 10 times higher. You want to make sure you can get some of those sweet gains that way. After a sale, your buyback needs to cost less than your last sale, or equal to would be fine as well, but yield you larger amount of tokens you sold, or at least what you sold. If you're buying back at what you sold at 15 at 0.1, you're going to need to buy over 20 and under 30 or in that range. For me, 25 to 27 would be around my preference. But if you were to sell at 15 and buy back at 10, you could buy almost 30 with the rake not in place. And if you were to avoid rake, that would be the exact buyback break-even price. So you'd get like 10 free of whatever asset class that you are buying in this situation. But if you buy back like 25, 26, say 25, you would get 5 free of those tokens for free, and you'd also get the same equivalency in your base currency for free as well. So that's why I like to do it under that kind of mechanism. Okay, let's talk about tokens in the bank because of rebuys. So when you're selling 90 and you're buying 120 back, then you sell 90 more and buy 120 back. Maybe you sell 90 more and 2 more times in a row and buy 120 back 2 more times. You will not, I wrote this bad. Your net tokens will be much higher. When these accumulate high enough, these can be used to place an additional higher up sell order or leave back in the bank in case this goes crazy high. So you're going to be gaining tokens every time. It's going to help you be able to create additional sell orders, have some back. That's all part of what you're looking to get done within this game. At least I'm trying to hope happens. I want to see like a buy, a sell, a buy, two sells, one buy, a sell, two buys, a sell, two buys, three sells, a buy, and stuff like that before a major market pump happens. Because when markets go, they go. They go up high and they go up fast. Which is the whole reason why I want to have a lot of sell orders. I only want to have 2 or 3 buy orders because I have only so many Bitcoin or Ethers or Litecoins or Doggies or whatever the base currency that I'm using. Or dollars, whatever, which one. I only have so many of them and I'm using them on multiple things. But if I'm buying, say, something like 1,000 of altcoin, whatever, say, ARK or whatever, then why do I need them for anything else? They're to be sold, so I can sell every single one if I wish to. And of course holding them back so I can be ready to sell if something like maybe this is to occur. And when this happens, some things to note. How many sell orders did you fill? Day trading. Oh, extra attention. When this is going on, I got plus orders. Because somewhere along this way, this market could have went up here, back down here, and then this within its intraday movement. And if you had the situation where you could buy back in here, there's an extra winning transaction play that can come in and, well, depending, maybe in a situation like this when you see it pumping, you can A, sell it where you did before and it's right around area and get another profitable trade. Or you could be strategic and say, you know what, I don't want to sell back here again, even though I bought here. Yeah, I got a sell order up all the way up here, but I can place an additional one that I would like to have, hop at a higher price, and then maybe connect on a big play that way. Again, be creative, look at different situations. As when you're in the day trading scenario, a lot of orders will get filled. And that's when time management's required. Next up, buy back. Get greedy. Yes, get greedy here. Go for some big score. You need to manage 2, 3, 4, 5, how many sell orders. A lot more than you normally place. And if you normally got a whole bunch of them where you get like 10, 12 sales in a period, maybe you're getting 60 of your sell orders get hit here. Or your high orders, however you play it. So now you want to play for big returns. So if you sold all the way up here, like normally, let's just assume when the markets were doing its normal thing, if you were fortunate enough to have maybe to play this range in here, maybe the difference was only from like say 15 to like 20 on top of here. And then you'd have an order in here. And then you'd have an order here, maybe here, and here. A whole bunch of sell orders getting hit. And you were taking just decent gains before. And I forget what number I referenced before, but let's assume if this was 1,000, and this number here is 200, I don't want to buy back for anywhere near like 400 or 300, 350 up to this stage. No need to buy back maybe at 500, maybe at, or 550, do one high speculation bet, buy back at 4, maybe 3, and so on and so forth. Go for the big gains because markets will do that. They'll fall down really quick. Oftentimes, they'll do it so fast, you got to be fast to it because you notice you get this sharp decline like this, And that means if this happens, this sell order is easily buyable. This one you can technically take for profit, but you can get greedy enough. Okay, I want to buy this one here. This one I want to buy back here and go for some sweet gains that way. Now in a situation, if this is to happen, and let's assume that you had a sell order, say here, you had a sell order here, 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 and here. 5 of them get executed. And then the markets do retrace lower. So you buy a small amount here, and then you looked at this level. Maybe you had 2 of your orders hit here. I've done that. I've done that where I'll put 2 orders in at the same price because this is just a strong area. And then you have, say, maybe another buy order somewhere around, say, here, and then another one down here. And let's assume the market goes down and you get this buy order hit. Well, if you were playing selling with when it was here on the way up with, say, 500 tokens, you're probably owning about 3,000 or 4,000 or some sick number now because of those great gains, or just some much larger number, 1,500. Whatever it is you were selling before, you're selling for a much larger number from there on in. So if you're selling 20 tokens per time, now you're selling 40 or 50. Because you're getting better, you're winning the game. You're at a higher level. After all, the plan is to start betting like 20 units and then 30, 50, 100, 150, 200, 400, 500, 600, 800, and hopefully your base currency goes up in the meantime. And lately for Bitcoin, it's been doing that and then some, or whichever currency you're using. I'm doing this in 3 different currencies now, in Bitcoin, Litecoin, and Ethereum, trying to increase each of its holdings by this exact strategy. Overall, the best way to practice this is with previous results or any random number generator, or even, okay, if it does this, how would it work? You don't even just think, okay, I'm going to buy it at 150, maybe I'd sell at 250, and just pretend, okay, that's maybe a sell order comes next, then a buy, then a sell. Calculate how the results would go. Use spreadsheets or some sort of writing paper with calculators, like accounting type of ledger pads of some sort that works for you. And try to figure out all the different situations, how you would treat it. And then when you're doing this and you see, oh my goodness, it would be so much better if I do something like this, that can help you figure out how you're going to implement your strategy. So how are you going to handle a major market crash? Because in that situation, that's when you get your share size. So after that point, you're either going to see the start of great returns, or you're going to view one of your epic few losers in the grand scheme of things, because if a market goes down and just keeps going down, you're going to lose, which is exactly why I stated you want to calculate in advance your total risk for the situation. But when you notice the major crashes and then you see some rebounds, that's why I like to go back to previous charts. You're going to have all these possibilities come in. And then the constant up and down volatility, the choppy teeth up and down, like whatever choppy action where it goes to 50, down to 20, up to 60, down to 30, up to 100, down to 50, down to 20, up to 100. I mean, that's perfect trading if you can do it. So just figure out, how can I get the best profits? How can things work the best within the risk and the reward management? The insane discount buybacks that I was talking about. If something goes up from, say, 20,000 Satoshi to 180,000, I mean, there's definite reason where you can consider, man, wait a second here, I don't want to buy back until like 70 or 80,000 Satoshi, which is what I'm going to be doing oftentimes in those situations. Because it usually goes back to those low numbers, major numbers after a major crash. If something's got the availability to go up 12, 18, whatever sick amount of times, it's going to go down a sick amount of times as well. If you're just used to thinking 50% off or 30% off on a stock chart is large, that's incorrect because everything's got its relevance volatility. And the relevance volatility for any code that goes up like 18 times means that losing 3, 4, 5x in a bullish situation is quite normal. And that's why if you're selling in that spot when something goes big, something goes from like 100 to like 1500, that's why there's nothing wrong with looking to buy back at 500 or 600 and get sick deals. And then when you're managing your bankroll in these situations, you see that what you started with is 3 times, 20 times, 100 times, 500 times larger. Well, that should help you manage your purpose, which is major compounded gains, so that when you do this in real life, you will have experience doing it in a fake situation, which will help with this is basically gaining you on experience, awareness, money management, execution. But as I've learned within playing poker and in this with many different situations of doing things, the more situations you see is better in experience. And in game theory, those who can recognize the situation best and act accordingly are the ones that are going to kick ass. Ask Bill Belichick of the New England Patriots if he agrees with what I just said. Thank you for tuning in and have yourself a great day.